go ahead and take a look at how we record receivables under both the gross and the net method. On June 3rd, Bolton sold to Arquette Company merchandise having a sales price of $2,000 with terms 210 net 30 FOB shipping point. The FOB shipping point means that title passes to Arquette at the time the Bolton Company loads the merchandise onto the common carrier. The terms 210 net 60 means that Arquette is entitled to a 2% discount if it pays the invoice within 10 days. Otherwise, the full amount is due in 60 days. Let's look at the entries under both the gross and the net method. Under the gross method, the Bolton Company will record an entire $2,000 as accounts receivable and the full $2,000 as sales. Under the net method, however, the Bolton Company will record a receivable in the amount of $1,960. That's the $2,000 sales price, less the 2% discount for prompt payment. Now let's go ahead and look at subsequent entries when Arquette makes payments. If the Arquette Company makes the payment on June 12th, that's within the discount period, and they will be entitled to a $40 cash discount. They will remit to the Bolton Company $1,960 in cash, but the Bolton Company needs to remove the entire accounts receivable from its books and will credit accounts receivable for $2,000. The $40 difference will be recorded as a sales discount. Now, what if Bolton had been using the net method? Again, Arquette will only remit $1,960 in cash. But since this equals the amount that Bolton has recorded as receivables on its books, no further entry is required. Now let's consider what happens if the Arquette Company pays outside the discount period. On June 25, Bolton receives a check for the balance due from the Arquette Company. The payment's outside of the discount period, and Arquette will forfeit the discount. Bolton will record the $2,000 cash collection and remove the entire $2,000 accounts receivable from its books. Under the net method, Bolton will record the same $2,000 in cash, but only has $1,960 recorded on its books for accounts receivable. It will credit accounts receivable for the full amount, and the $40 difference will be recorded as a sales discount forfeited. Let's consider one final scenario. What if payment has not been received by June 30th and the Bolton Company prepares interim financial statements? How will Bolton record the forfeited sales discount? Under the gross method, no entry is required on June 30th since the sale was recorded initially at the full gross amount of $2,000. However, using the net method, since it was during the month of June that the Arquette Company forfeited the sales discount, Bolton will need to record that on its financial statements. It will record a $40 increase to accounts receivable and record the sales discount forfeited of $40. Of course, when Bolton makes a subsequent collection, it will be expecting to receive the entire $2,000 in cash and will debit cash and credit accounts receivable using both the net method as well as the gross method.